What's going on, everybody? Jeff here. Welcome back to the channel. All right, guys, I want to talk about an article that was released over the weekend. I kind of find this to be a little bit ironic because there's been so many anomalies that we've seen over the past few months. January CPI is set to be released tomorrow. If you're watching this video anytime Monday evening, this is the first month of the new calculation. Now, if you look at the market, the way all equities have really been reacting to any, Fed news, any CPI news, they're really starting to brush it off. And there's a couple things that are happening behind the scenes that I want to uncover before we get into some of the facts behind this and what some of my theories are. I do want to say that part of me feels investors and the market is actually beginning to show signs of invalidating CPI. Now, what I mean by that is you and I'm going to speak for most of you, but definitely myself, have begun to feel that the inflation numbers being reported are not very accurate, okay? Based off of their calculations and what we see being the consumer, we're seeing two different things. We are seeing prices rising a lot more than whatever the CPI number has come out over the past few months, anywhere between 6.5% to even 9%. We're seeing much higher, commodity prices than that throughout the entire market. However, we know that their calculations are really done in a very specific manner in order to kind of really bring that number down. So things don't really appear to be as bad as they are. We watched a lot of that happen over the midterms and so forth, as well as mainstream media portraying that. But let's take a look at what had just come out over the weekend. So first of all, before we touch base on that, we have now entered back into that channel that I talked about in my last video, that 408 to 416 area we had broke through, kind of acted as a little bit of resistance. And this morning we broke over it, kind of that held, and it just continued to move up to the upside, sitting right in between that channel at about, almost 413. But let's talk about the article. So this is what the one that came out, and Seeking Alpha is not really my favorite, many of them are, but Seeking Alpha is not really my favorite media outlet. And the reason being is because they can be very one-sided, okay? But this article does a good job really kind of just explaining both sides, okay, to the CPI reporting, inflation, as well as how the market is reacting to it. They are a little bit on the bearish sentiment. You can definitely see that, especially what I'm going to go over in this video. But the highlight of this is the United States quietly revises Q4 inflation up. Okay, now let's take a look at that. Now, last month when CPI had come out, okay, it shows right here. This came out on January 12th. CPI for all items, the December metrics, falls 0.1%. Well, it was revised and it was actually positive 1%. Okay, so you take a look at this and it shows, all right, December month over month, core CPI was adjusted upward from 0.3 to 0.4. November core was adjusted upwards from 0.2 to 0.3, and October was unchanged, still at 0.3. If you remember, we'll zoom out and you can see this this white arrow I have right here. If you remember, we moved pretty steadily into CPI. It came out, we popped, we pulled a little bit. As you can see from where we were around that 400, we've continued to move even higher, showing signs that, listen, inflation is, coming down. The Federal Reserve came out. Jerome Powell had said, listen, inflation is starting to come down a little bit. But in reality, after their adjustments, it shows that inflation is actually rising higher than expected. You got to think, if that number came out and it missed estimates to the upside, we probably wouldn't have, gone from that 396 area up to 400, kind of hang around to close somewhere around that time frame. We would have pulled very, very hard. If you zoom out even further and take a look at the previous, which would have been November's, it was the same thing. However, we ripped massively from around that 403, 404, all the way up, hitting some resistance at 14 before obviously selling off, a lot of profit taking and cooling. Kind of begs you to, wonder exactly what was known on the other side. Do they know these metrics were really coming in a little bit lighter than expected? But this article just explains even more details on how the market is reacting, not only just, you're seeing the NASDAQ is rallying nearly 20% and the S&P shooting up almost 8%. But also when it comes to earnings, okay, we'll get into that in just a moment. But core CPI, they state, is 0.4% month over month, and it implies an inflation rate running at about 4.9% annually rather than 3.6% annually. So the adjustment of the previous, well, it was really the adjustment of the previous 3 months, although October was unchanged, but the adjustment of November core CPI being higher than originally presented to us, as well as December, shows that core CPI is not running annually at 3.6%. It's actually running at 4.9%, while the market is pricing in a 3.6% annual run, while also investors are pricing in and betting on the Federal Reserve to hit that peak rate hikes and then eventually obviously start to pull a little bit. This kind of speaks a little bit different of a picture. Now we get into, obviously I covered the Fed pivot. Now we get into, okay, what it comes to earnings. Okay. Now earnings are being priced at, when it comes to earnings per share and so forth, are being priced at that inflation rate. Okay. You also see other countries, and this has really been, it seems like, the bear sentiment on Twitter, right? That there's two things. One, or I would just say three things. The Fed pivot isn't going to happen, which I can kind of agree with that. I already talked about, the three stages of the Fed pivot. We officially hit stage number one, which is the slowing down of interest rate hikes. The second, a big bear sentiment, okay, is the fact that other countries, as you can see here, is reporting higher, than expected CPI. And lastly, the third bear sentiment is just saying, like, listen, the market has to go down, right? They're just so bearish on this, it has to go down and so forth. But it really brings, a different perspective on what action the Federal Reserve needs to continue to take, and also what is being priced into the market. All right, if you zoom out just a little bit further and see where we are on a daily chart, okay, and I'll try to clean this up just a little bit, zooming in, you can see this massive rally to the upside. All right, the volume is kind of staying consistent. It is slowing a little bit as we are heading into the CPI. Is this another liquidity grab? Do we have a lot more room to go down? Now, like I've said a long time ago, I personally do not think that we have seen the bottom overall, just because of how market cycles run. And if you take a look at where we ran over the last 10 to 14 years, how the longer term cycles run, especially when it comes to battling something very rare like this rapid inflation, I do think we will see a lot more struggle before eventually we get to the upside. And I think it will take a lot longer of a time, somewhere around that 4 to 7 year period, before we really start to move to the upside. Like I said, I could be wrong. I've also made a video saying that it doesn't really matter to me on what reaction the market takes. I've trimmed my long portfolio way down. I, am very actively, trading intraday charts. And like I said, I play setups and play the moves. But it's just very ironic. And like I said, when CPI does come out, tomorrow morning, it will be ironic to see how much, reaction we see. Will this start to be a slow reaction? If you remember, it seemed like every single time any Federal Reserve, member had spoke, or Fed president had spoke, the market would react very strongly. And you've slowly seen, okay, the influence just really fade away. Obviously, when Jerome Powell comes out, it's not very often. When he speaks, there is a lot of reaction. I think the volatility has slowed down a little bit. You could take a look at the options chain throughout the entire markets, the indices, SPY and QQQ. You can see that volatility has gone down a little bit. They're pricing in a little bit softer of a reaction. So like I said, it'll be ironic to see. This is early. I could be completely wrong. CPI could absolutely shake the entire market. This could be a liquidity grabs to the upside, and then we make that really big move down. Okay, puts to calls are about a 3-to-1 ratio. So you have to also think in the back of your head is, listen, what are market makers pricing in as of right now? But I hope this video just gives you a little bit of light on not only what is being reported to us and presented to us, okay, but also what is being revised, how the market really didn't react to anything. If you can see, obviously we grinded to the upside today, up a little over 1%. And then as well as what we are seeing firsthand as the consumer buying the commodities inside the stores, shopping and so forth. So guys, that's it for this video. I'll see you in the next one.